Okay, last video I talked about high and low violations and high to low days and low to high days. Let me put a little VWAP discussion in because I think it is good in that it can give you clues and it can certainly keep you out of trouble. So let's look at this is a 15-minute chart of the S&P futures, and let's go back to this is October 9th, and I'm going to compare and contrast 2 days that look similar and how you can get clues as to why they're different. Okay, coming into 10-9 on 10-8. First of all, on 10-5, which was a Friday, you had a strong up day. 10-8 was actually a holiday, as I remember. I think it's Columbus Day, and the market traded back down. So you've had a high to low day, and the 10-9 opens up, it gaps up and does a high violation, right? Which can be considered a short in certain situations. But the interesting thing here is that in general, on a day that has a strong, kind of like this, where it has a decent close and it gaps up the next day, often ultimately this is going to be a bullish day, but it's going to shake out a lot of the people that are long. Okay, that's what the market wants to do. It wants to shake everyone out and then go up. The way you can a good quantitative way to follow this is, okay, the average price of one day versus the average price of the next day, which is what VWAP does. So on average, we can go look at VWAP in a second here, but on the average price this day was lower than the next day, and so it's building higher value. People are paying higher prices. This means, in general, this is a bullish situation. You've had the high to low day that sets us up. You could be looking for a low to high day. After a gap, after the high violation is played out, that trade is played out. Once it pushes back down and is shaking enough people out, it will generally go up. Okay, let's go look at that day, 10-9, on the intraday chart, and let's see here. Back to 10-9. Okay, here's the intraday chart. This is a 2-minute S&P futures chart. You can see here there was a gap up. These yellow bars. I start this chart a little bit early in the Globex session. These are the opening where the 9:30 a.m. Eastern open is. Okay, so instantly, so this yellow line's the VWAP. This blue line is actually VWAP plus 10 points. This is VWAP minus 10 points. The market gaps up. It makes a high violation. In most situations, that's going to be a fade if it's going into a resistance zone. We won't talk about that at the moment though. It does trade down. It then chops around this VWAP level, and it comes down. It tries to break lower. It forms a little flag that forms under VWAP. This is the key part of this. See how it comes up? If it comes up and it just touches it and pushes away, or if it comes up and falls short of it and pushes away, that's consistent with the down move, right? If it comes up and touches VWAP and then re-enters it and just hangs around, that is consistent with then you want to go with the higher time frame. Okay, so in this situation, you have a lower time frame bear flag, where if you're following an oscillator, you probably got a little momentum push down. It comes back up, forms a flag. It's in general on the shorter time frame, this is a short. You play it but the higher time frame says this VWAP level the previous day might offer support. You're building higher value today. Eventually, you want to be long biased, but in the short run, on the lower time frame, it's a bearish pattern. Once it comes back up, goes above VWAP, and then does not break hard lower. Instead, it breaks hard up. You can see here, this is confirmation that the higher time frame is kicking in. The lower time, it's shaking everybody out. It's rejected them. It tested lower. It almost has to test lower here to shake everybody out and see if there's more business to be done. See if it can get more people to panic out before it eventually goes up. It's going to test. It's going to but once it does this, it's confirmation that you're not having a big down day, and I'll show you why. Let's go to a day that starts out similar, but you can get clues why it's different. Let's go to October 17th. Let's go back to the 15-minute chart for a second and look at October, the lead-in going into October 17th. Okay, this is October 17th, this day on the 15-minute chart. You can see you've had a high to low day on this day, traded high to low, another high to low day, traded high to low. There was buyers in this range down here. It looks like there's buyers down here, and this downswing might be over. The market gaps up, and you could easily be looking for a low to high day on this day. And we're gonna watch VWAP and see why that's not the right play. So high to low, gap up, and it starts to come in. It does do a high violation and starts to come in. That's still consistent with a bullish day. So let's go on the lower time frame again. So right now we're thinking the lower time frame is bearish because of the high violation, and the higher time frame is bullish because the VWAP is going to be building at a higher level than the previous day. Okay. So let's look at 1017. Here it is. Here's VWAP the previous day. There's the VWAP level from the previous day. There's a lot of buying in here. There seems to be a lot of support. Now let's watch price action on the lower time frame. Okay, there's the high violation. Trades down. It's shaking people out. You're thinking it's shaking people out, but watch how it responds to VWAP. It comes up, it touches it, and instantly pushes away. It comes up, stops right below it, and pushes away. This is bearish short-term behavior. Okay, so long as it's bearish in the short term, you got to be careful. You're trying to line up the lower time frame and the higher time frame together. Okay, you're still thinking that the higher time frame this seems like reasonably. This seems like okay action. It's consistent with a lot of days that try to shake everyone out and eventually go up. In this case, you're getting these clues on the lower time frame that you might be in trouble. Actually, this is a pattern. This is a little Linda Raschke, Elliott wave type of pattern. It's called an ABC, which is two pushes are considered counter trend. Three pushes are considered with the trend. Here's a little one push, two pushes up into VWAP, up into resistance. Again, it rolls over. It breaks lower. It forms a little bear flag. Look at this. It forms a little flag, right? It's a little tricky because it looks like there's a lot of support in here. So had you been short, you probably want to cover into this. But again, it forms a little flag and then it breaks lower hard. Here you got another little tiny bear flag. Once you see this action, you're thinking, wow, this is starting to it's starting to break support here. So it pushes down and down. Notice though the key here, you're watching the clues. It never touches the VWAP until way over here, right? And even then, it comes up and it rejects it at first. It comes down here. Here the clue is the higher low. Once it comes up, it should reject this and make another hard push down. You had buying in here. It made a higher low. Now it's come up and now it's hanging around here. The short trade is pretty much over at this point. Once it makes a higher low late in the day, after not rejecting the VWAP. Not only that, you're also down a lot on this day. It's down from 1560 down to 1535. The short trade's played out. But notice how that lower time frame can keep you out of trouble. You can watch this intraday action and you can watch closely how it responds to VWAP. If it's responding bearishly in the short run, you want to either scalp the short side or go with the short side. If it's not acting bearish, you're going to revert to the higher time frame. Once it penetrates VWAP and chops around, that's actually consistent with bullish behavior, so the higher time frame is ready to kick in. Hope that made sense and can offer a few more clues on a way to use